Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we are going to be jumping down into the world of Bitcoin, taking a look at a bit of a macro view of what's been going on and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now, if you haven't yet joined us in Discord, link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not check it out today? And recently, we have launched our new podcast, and so if you haven't yet checked that out, link is in the description down below for our new podcast on YouTube, but it is also available on Spotify and on Apple Podcasts as well. So why not check that out? It's all over our Discord. It's in our video description down below as well, and it's really good, easy listening for whilst you're driving to the office, so why not check it out? Okay guys, let's waste no more time. Let's jump right down into this, right? So Bitcoin paired up with USDT on the daily chart, and Binance is the data source. Okay, so here we're obviously just taking a look at a macro view, and we're going to be specifically taking a look at the descent that we've been having, right? So I have temporarily drawn this up as a 5-wave move upwards on the left hand side here, and basically this takes us from the lows of the December 2018 bear market through to wave 2 low of the pandemic crash, which was not lower than our original origin of this entire 5-wave structure. 65k marks the top of wave 3, although it is also possible that actually this is the top of wave 3 at 69k. Okay, and for this example, I've actually left a 5th wave at our 69k high. Okay, now it is possible, of course, that that 5th wave target hasn't happened, and that's going to be in the next cycle. This is our 4th wave target, our 4th wave descent, and this up here is our 3rd wave. Okay, so lots of different ways of looking at it, but for now, I'm going to leave it as a slightly rarer, shorter 5th wave, okay, which can happen, but they are very unusual. They don't normally happen like this, but we are going to leave it like so, okay? And again, we could also articulate in here, we have ourselves a little 5-wave move as well, okay? So we could say that that's also playing out. Okay. So if that's our 5th wave, then this means that this is a corrective move going down. We have lots of overlap, and we have lots of invalidations for any 5-wave structures or anything like that. So it's not a trend to the downside, okay? There's no trend coming down here, but it is very much a corrective pattern. And if we go ahead and just measure the distance of this first little bounce just here, this was 32,000 up to 48,000, okay? And if we take that first part, so this first drop to the downside, there was one significant bounce in the middle there as well. But if we take that measurement and we move it over to that 48k bounce, okay, so we go from 32 to 48, and then from here you can see that we've pulled back down, and this is the descent that's really interesting, because this could be a macro 5-wave move. So if I go ahead and just zoom in on this, what we'll do is we'll make sure that we get this the top of this right on this nose here, because it's important that we get that right. And as we come down, you can see that we've gone past the 1.236. We've bounced up a little bit. There's the 1.382 and the 1.618. So if we were to drop down to $14,000, which is possible, but not likely, then that could basically mean that we're going to drop down much lower than maybe $12,000 or so. So a little bit of speculation there, but also just note that we haven't got a really good wave count to support this. Normally this would be a 5-wave structure, right? You'd have some kind of wave 1, wave 2, some kind of massive wave 3, wave 4, and wave 5 like that, right? Normally wave 3 is the overextended, but instead what we are seeing here is this kind of bounce in the middle and then a pullback down. Okay, and this is vastly different to what we would expect before. So we've got a slight overextension, okay, as we've headed down towards the 1.382. But if we were to measure this little area just here and that high, move this over to our bounce point, and here you can see we've come down to a 1-to-1 ratio. So this is actually more in line with thinking that this is some kind of WXY like this, and it is possible, of course, based on some other indicators which I'll go through in a moment, that actually what we end up with is going to be something like this, a WXYXZ. Okay, so we still come down lower, It looks like a 5-wave move. However, it is not an impulsive trend-setting 5-wave move. Instead, it is a corrective pattern 5-wave move. So I think it's important that we kind of just acknowledge that. I do think there's a little bit more room to the downside. I don't think this is necessarily over yet. And at some point, you're going to have to stop kind of counting these waves. But for now, what we can do, of course, is acknowledge that there's another bounce that has occurred right here. Okay, if we were to take that high point and we were to try to move that over, and then we could, of course, indicate $12,000 and lower and stuff like that. Alternatively, though, however, I think inside here is the structure of a 5-wave move. And that could basically just bring us down towards the $15,000 lows. And from there, I think we found the bottom. Okay. However, nothing is set in stone and we should be a little bit cautious at this stage. Okay. So that's kind of the macro there. We can kind of see that we've gone down over the 1-to-1 ratio on the standard kind of corrective move. And of course, we can see that there's a small kind of 5-wave structure, which we've been mapping on the smaller timeframes. So as I jump on down actually, no, before we do that, I'm going to bring the stochastic RSI into this. Okay, so here we can see that we were oversold, and this bounce is moving that stochastic RSI up out of the oversold area. Okay, so from here we can, of course, just reverse. We can just pull back down. This has happened previously, specifically over here when we move on up from here. We move up and then still pull back down afterwards and complete the corrective pattern. Okay, and I'll try to find another example of it, one over here as well. So basically we move up and then we pull back down just over this side. So we should be cautious, and we should be cautious because there's a lot of people saying that the bottom is in, but I don't think there's actually a real requirement to say that that is happening right now. We haven't seen the right structures form to kind of say that we are moving on up. This daily stochastic RSI is moving quite fast with very little price discovery. So maybe there's a little bit more room to the upside to be had before we pull back down. But other than that, I think we're going to pull back down, and it's going to go out lower than we have been already. Now, if we jump down into the 8-hourly stochastic, you can kind of see the subwave counting going on here. But you can see that we're overbought on this 8-hour stock, right? So this is basically indicating that a price move down is very, very likely. And if we come down into the 4-hour, again, same story. We're overbought, and therefore we are likely to see some kind of downward price action soon. And we jump over into the hourly chart, again, we are overbought. We are likely to see this downward price action to occur. So we should be cautious, right? I think essentially there's potentially a little bit more room to the upside, possibly. But alternatively, I think there's a little bit more room, a more higher probability, I guess I should say, of complete collapse to the downside. Now, if I throw the Bollinger Bands on here, this is a good way of just kind of demonstrating visually how the price action is testing, these limits. Now, whether you choose Elliott wave theory to kind of give you kind of the ends of these moves, whether you're using the stochastic RSI to help you understand the momentum behind the price, whether you're using the volume and you're seeing whether or not the volume is diminishing as the price is pushing up, which is the case here. As you can see, since we had the bottom, the volume have actually decreased and continue to decrease even after we've pushed up a bit. This is basically showing you exhaustion. So the Bollinger Bands here are basically, many traders are going to trade these. They basically trade from the lower band to the upper band, and when you're on the upper band, there's a high probability that you're going to pull back down. Most people will be either shorting at the top band or just selling and waiting for retesting the bottom band and buying. And basically, you'll find that this is going to be a key place for people exiting out of trades and things like that as you test this upper band. And this is something that you see a lot. You'll find the price reacting quite a bit to those upper bands. So just bear in mind that I'm looking at all of this as a 4th wave correction, potentially a move up to maybe $22,500, maybe $23,000, something like that, maybe possibly. But we are showing a lot of exhaustion on those stochastic RSIs. They are indicating that we're likely to see the pullback down very, very soon. So essentially all of this is just a 5-wave structure at the end here. It is possible that this 3rd wave is up here and 5th wave is already in and the bottom's there, but I don't think that's what we're seeing from the momentum indicator, and we haven't seen the right structure to kind of see us usher on out of here. So I'm still thinking there's more room to the downside, and our targets really are pretty much dropping down between $15,000 and $17,000. So at the moment, that's what's being indicated. Obviously, there's no guarantee that it'll even stop there. There's no reason for it to necessarily overextend in this fifth wave, but it is a possible scenario. So making sure that we are aware that although I have some targets that are between, you know, $15,000 and $17,000, essentially that doesn't necessarily mark the bottom of this. It really depends on how those waves form, what the sentiment is in the space, and essentially whether or not that the support is going to hold and we're going to find the right structure for reversal to the upside. So the other thing I just want to kind of touch on very briefly is going to come over into our Bitstamp data on the weekly. This one basically shows us the cycles across the different years. And again, we've been following a few of these. I just want to kind of touch on the Gaussian channel just a little bit here, because there are some interesting things that are going on. So I'm going to just come back into the Gaussian channel from the 2013 all-time high into the 2015 bear market low. Now here, the Gaussian channel turns red once the value seems to be, once it seems to be undervalued, right? Basically what this is doing is the Gaussian channel is a glorified set of moving averages. And when it drops down below the average price, it's going to turn red, right? So when you have this Gaussian channel, you closed inside it, it's basically telling us that we're going to drop down into a bear market. That has held up really well, even though there's been some new pieces of data recently with how candlesticks are interacting with this Gaussian channel. Essentially, it doesn't matter. Once we closed inside it on the weekly, we are looking to drop down here. That's consistent. So what we've got here is basically a, what's that, 1, 2, 3, 4, 5 week period, right? And during this, we pull back down, right? We bounce up a little bit, and then we have that final collapse. Okay, then we start the recovery and this kind of grind out here, and then we moved up. Once you closed above the Gaussian channel, we stayed above the Gaussian channel until the next bear market was triggered just up here, where we slip down. And again, here we have a very similar scenario. We drop down, we go 1, 2, 3, 4 weeks, we bounce up a little bit, and then 5 and 6, and the 6th week we hit the rock bottom, and then we grind our way back up. We close above the Gaussian channel. We had a little bit of a pandemic crash here. Other than that, we kind of rode this back up. Now, what is really interesting about this is that one candle closed inside the Gaussian channel, then the next one closed outside the Gaussian channel above it. And that's the first time in history that had happened where we hadn't actually gone down below, other than maybe this area here with the pandemic. So there's a few pieces of data, but essentially once we actually had closed inside it, we still ended up going down below it, and that is consistent. Now here, so far, the Gaussian channel had turned red. We were in 1, 2, 3, we're on the 4th week. So the next week, or even maybe this week, we actually go ahead and pull this down into that final bear market low. We're just waiting for that little bit of a bounce, and then bam, I think we're going to have that bear market low triggered. And then of course we start that grinding process where we try to get out of here. Could be a couple of months or so, and then bam, we should start to climb up through the Gaussian channel again, close above it, and then we're into the next cycle upwards. So looking pretty good from that kind of perspective on the macro. So I just wanted to kind of cover that off. I just wanted to kind of really illustrate that the Gaussian channel's actually doing really, really well, even though there's a couple of moments of new data from 2021 that hadn't been seen before, that put that whole analysis indicator on hold on the channel, just because I wanted to see how it would play out. So have confidence in it, and the confidence is definitely there with the Gaussian channel. So let's jump back down into our hourly chart, right? And we obviously have this move to the downside, so we are expecting that little bit of a move a little bit higher, and then obviously that complete collapse down. That's still very much valid. I am expecting this to kind of then be the bottom. So in line with that Gaussian channel, you know, potentially this bounce upwards, we find ourselves overbought, and then we have that final move down, reaching the bear market bottom, and then from there I would expect a slow kind of grind to the upside to be had, but the structure should reverse. We should have seen some kind of divergence as well in the data, and we should then start to see some kind of move to the upside. So guys, I'm going to leave the video there, guys. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then go ahead and subscribe, and you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.